The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials are down 20. We have the NASDAQ off 31. S&Ps are off 2.5. Gold's up 290 at 1176. You have silver flat at 1597. Oil's up $1.75 at 59.89. Bonds are the number out here this morning, folks. Bonds are getting toasted and roasted. So let's go over. There she is. Okay, so the 10-year is down 12 ticks, 124.30. 30 years off a 1.5, trading out at 148.20. And bottom line, folks, that bond market is going to continue to keep pressure on the market itself. If we go over to the E-minis just for a minute first, what you're going to see out here is this. You're coming into the May 6th swing point, folks, and as we came into that yesterday, you come into a dramatically lighter volume. This is a natural place for a little bounce in the marketplace, and I expect you're going to have it. It probably just started just now. The E-minis had hit 2068.75. Right now, we are at 2075. That basically is setting up, and if you want to see some intraday, you're going to see this is pretty wild how this shook out. When the market opened, folks, what we actually had is that you had a spike higher with volume. That first initial spike had volume, then they sold the baby off, couldn't get it down into the lows. What that sets up is that sets up at least a test of the high spike from this morning. So it's going to be a little deviant how this market is playing out today. But I do expect that more than likely, and this is even with the DAX down $132, that we're going to get some kind of a bounce out of here. That bounce, however, is going to be an ABC. It's going to be the B point of an ABC structure on the way down, because what we have had thus far is this, that the market can't hold highs either. That's how this is shaken out. But it's just enough to get a bounce going, because you got underneath the, the 50, you got underneath, well, we're not underneath the 200, but that's enough to basically get a little bounce going, and we'll see where that little bounce will take us. Some of the high volume stocks, and I do expect, let's just see, I expect what you're going to see out here today is that it's still going to be a low volume market. See, we're coming into 132 million shares when we take a look at that 128 million, I think. No, 135 million. So you're coming into 135 million shares. Yesterday, what we did, let's put the SPY up here. What we did yesterday is that we only did 89 million. So bottom line, you get a bounce. Now, the natural place for a bounce on this, okay, goes like this. We put this here so we can see what we're doing. Okay, so we're 208.32. A natural place for a bounce would get you into 210.20. Which is quite a bounce, actually. But what that is how we came off the highs. Now, first day, what do you have there? Probably light volume. We'll see if we can get any follow-through coming in tomorrow. But more than likely, you'll just see it hit that. That's going to be the B to C. So your A point up here would be 213. Your B is the low out here is 207. Let's see, 213. What? Yeah, so it's going to be a $5 A to B. That's how it's going to shake out. We'll see whether the market can sustain a bounce. What was intriguing yesterday is this, is that the market is having a wicked hard time just holding on to price. So all the surprises, folks, are going to come to the downside. That's how this market is set up right now. Some of the Dow stocks. Oh, and by the way, the transports are just getting killed, man. Delta Airlines is taking another leg down. Big numbers. You get IBM down 64. You got Boeing flat. Caterpillar's up $1.18. Oxy's up 57. Let's see. Walmart is up 7. Microsoft is up down 7. Intel is down 6. Amazon is off $1.90. And if we do go over and you want to see some disasters out here, oh man, these airlines, Delta Airlines is taking a deep. Delta right now is the leader inside the NDX 100, bringing this baby lower. Well, actually, Akamai just took that over. Akamai is down 223. American Airlines is down 102. If you're looking at Delta here, this is how Delta is shaken out. Delta is a large ABC structure on the way down. It's down another $1.31. This is off a high of $50. And she is heading, oh, yeah, what a trip this is. Okay, so we were talking about this yesterday. Let's pull this back, see, because you got to see how this is set up. The setup here, folks, right, is coming right into the October 15th benchmark that we've been talking about for quite a while. That benchmark on Delta is $35.14. Bring this back. $35.14. And that high volume benchmark, that's where the S&P wants to go. And that the mind blower inside that is that is a huge problem, because that is so far down. It's incredible, man, compared to where the S&P is right now. Now, the transports are trading at 82.89. Well, the transports are they're only like 40 bucks away right now from the top of that, I believe. Let's see. 81.69. Okay, so we're 120 bucks away from the transports themselves, the whole indice away from that high volume swing point. That's where that's going to go. Now, the heads up on that, of course, is that if, in fact, that's what's happening, that S&P is going to be, who knows where it's going to come out of, but that S&P, that would be one nasty run on the way down. That's what that comes down to, and it's pretty intense. There's no doubt about that, because when we take a look at it, we're going to look back on this and say, you got to be kidding me that the SPY goes from 208.27 down into this area of 191.15. But the market's acting correctly that it wants to go down there. Specifically, what I mean is this. If we do get this bounce today, that in itself is deviant enough that, you know, folks come back into the marketplace, say, you know, you're down to a lower swing point. You came down, you rejected lower price, you bounce out again. Bottom line, we get that done, you're going to basically see a very large ABC structure on the way down. The reason that I'm saying that the market is acting correctly here is that markets just don't fall apart from highs. That's what they do. They roll. There's a slow roll that happens, and that roll we're in that roll right now. And what has happened is that inside the roll, you get certain equities that just get destroyed. And that's also has been happening, is happening. And they're large caps. There are some big numbers, man. Walmart, you know, Walmart right now is trading at 72.61. Bottom line, you know, Walmart is trying to get inside. It's 70.25. You know, Walmart gets it back inside 70.25. That's a false breakout, and that false breakout happened June of 2012. So it's a big number. You're talking 2 years ago. And what you're also talking there is that when you can't bust them up, guess what? You're going to bust them down. There was a piece today on, this is amazing, because there was a piece today on China. And Shanghai, no doubt, folks, is a little rocket ship. Okay, I'll put a chart up of Shanghai for a second so you can see this. Because this is pretty amazing. And the sad part is that it's like, man, this thing is going to get killed. I don't think it's ready to get killed yet, and I'll show you why. But what you do have is that they had a piece, and they had this reporter this morning on CNBC out in a village that only had 1,000 people, and the closest place was like 3-hour drive away, and they had little trading rooms set up. And they were talking about, they had one queen goddess that she started with $800, and she has 33,000 right now, which I'm sure is a lot of money there. And they're talking about everyone trading stocks. And they're all farmers. And they've never seen a downdraft. So the Shanghai right now, you know, bottom line is that the Shanghai, you talk about a rocket ship, the Shanghai has just gone from 1991 to 5,113. Now, I suspect that the Shanghai is going to basically get up and probably go another 1,000 points. Because the high of 07 is 56.83. And this move does have volume. You know, so it's just going to be a matter of how we get up there, how we test that, and does it give it up at that point. But on a fundamental basis, there's no, I mean, if you see this article, Google the article, folks, because it's like crazy. I mean, it's like absolutely crazy. You just picture that it really is like we were in 1999 or 1998. Like every single shop, no matter where you went, had CNBC on. That's all people were talking about. That phenomena was out here. There's no two ways about it. So, you know, those never end in a good way. That's just how it goes. Particularly for folks that don't understand that when you get in a market and you just make money hand over fist on a continual basis, your first downdraft, you don't even believe that something can get sold. You just, you know, and the quotes that they're giving are pretty amazing. The quotes that the large brokers over there are giving is that, hey, the government is behind the rally. So as long as the government's behind the rally, it's okay. It's like, okay, really? Amazing. Inside the NDX 100 with strength versus the weakness, this is what you have. The strength inside the, well, we're down 24, but the strength is Walgreens. Netflix is up $8. You got Charter, C.H. Robinson's up 71, and Mattel is up 18. Taken away from it, Akamai. Akamai's down 218. We got American Airlines off $1. Micron's down 53, and Dish Networks is off 122. We go to the IBB. The IBB, folks, just about runs the composite itself. So the IBB this morning, you had the first leg down. What it did is it got into the lows of yesterday. The lows of yesterday in the IBB was 359.55. We hit 359.51. Now we hit that. Let's see. Now we hit it with a little volume. But it looks to me that the IBB probably is going to reject lower price again, and that's going to get a little bounce going in the NASDAQ. It's Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 25. You get the NASDAQ off 34. S&Ps are off 2.5. Inside the Dow Industrials, what do we have? Strength versus weakness. This is how it's set up right now. The strength inside the Dow is that you have Caterpillar up $1.22. DuPont is up 41. 3M is up 82. And you get Merck up 33. Taken away from it on the way down, you get Apple as the leader. On the way down, that's 175. Trading at 126.05. You get Dish Networks down 134. United Health is off $1, and we got Home Depot down 74 cents. If we go over to Apple and take a look at Apple, big developer conference yesterday. Bottom line, a lot of publicity. It's not doing much good. We have what Apple is this. Your Apple today, you get a huge expansion of volume, actually. We've done 16 million shares. Now, you're going into the swing point that was established out here from the 6th. Yeah, that's also the 6th. So what we had out here on the 6th of May, we had, let's see, 72 million shares traded. Now, the way Apple is trading is that, yeah, it can get into that 72 million. So this one's going to be really intriguing, watching how it comes into that, because Apple has been on this consolidation for quite a while. And someone just threw nice order into Apple and just basically broke its lower low from today. And I expect, let's see, you get 5 minutes into it. Yeah, this is going to break it with volume. So we got 3.5 million. We've already done 2.3 million. That's going to break it with volume. So Apple's going to try to go after this lowest swing point. The lowest swing point we're talking about is 123.636. If Apple gets into that 123.36, you'll see that NDX get hit a little bit more. Let's bring over the 3 Qs and let's see what's happening inside the 3 Qs. Inside the 3 Qs, what we have intraday is that, yeah, the correlation is just about direct. So 3 Qs just got down to a price point of 107.28. Now, the difference, there is a difference here. Okay, so watch this difference. This is going to be wild to see how this shakes out. So the 3 Qs thus far have done 658,000 on about 6 minutes. Well, it's 1.2 million they get a break. 1.4 million, though. So we'll see where this shakes out, because if you get back inside 107.49 and you're at 31 right now, that still sets up, you know, higher price and a bounce in this market. Apple can do quite a bit of destruction. There's no doubt about that inside the NDX 100. The IBB is the biggest destruction, though. There's no two ways about that. The IBB, if that baby lets loose, then NASDAQ, see you, don't want to be a. What has let loose somewhat right now is Biogen. Biogen's down $7.30. She has 450,000 shares traded, but she's also coming into 4.9 million. So she needs a huge amount of shares to expand. Amgen, which is the second largest weighting inside the biotechs, is down $1.97, and that little baby has lighter volume, but it looks like it's going to take out one of the swing points with juice. And Amgen does want a lot lower price. There's no two ways about that. The whole biotech index, folks, wants a much lower price. It just has been resilient and hasn't cracked. That's what it really comes down to. So we'll see as this market gets going. There's still not enough thrust on the way down inside the S&Ps. What we've had the S&Ps is this. So thus far, you had the first. So yes, last night the S&Ps. Let's see. 0600 this morning we hit 68.75. Okay, we go up at the open this morning to 82. We haven't got into that 68 area. That's number one. Number two, which is more important. Let me bring this up. We'll put this on a 10-minute. You'll see what I'm talking about. So this is the actual test. Oh, this is going to be cool watching this shakeout. So watch this. Now, when you get to swing points, that's where the market talks, walks, and squawks, okay? So the swing point that we're dealing with, okay, is from this morning at 0600 at 068.75. The S&Ps get all the way up to 82 this morning on the open. They pull back, and they have volume, folks, at 71.25. That volume, there was 80,000 contracts. Right now, we're going to do this test right now, and we are at 9 minutes into the test, and it's dramatically lighter. Now, this is the key. Number one, can you hold price and reject price? So it's 71.50. That's what you're looking at. Oh, this is so cool. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow's down 38. Nasdaq's off 41. S&Ps are up 6. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Starts off at 8 a.m. We got our man, Mr. John Logan, kicking you off. Larry Pesavento, 9 to 10. I'm 10 to 11. Basil Chapman, 11 to 12. Today we get our man, Mr. Kevin Hinks, TD Ameritrade. That is going to go 12 to 1. We got Darryl Martin, 1 to 2. Dave White, 2 to 3. And I'm back here 3 to 5, and our man, Mr. Andy Hecht, is 5 to 6. All that programming, folks, you get right on your cell phone, TFNN.mobi. If you want to get Tiger TV, just go to TFNN.com and hit the box on the right-hand side. As you hit that box, our servers are going to know exactly what type of device you're on, and you'll be able to get the charts with the audio. Burlington Factory, toasted and roasted. Man, I guess we are not buying any more clothes. I can understand why, too. It's like, you know, what do you actually need? Bottom line is that when we take a look at this, we'll put this on a daily. What you're going to see, it's a monster ABC down. This is getting taken apart today big time. We're down $5.30. You've already done 4.6 million shares. The B point on this had 2.4 million. So what do you have? You get an A point up here, $60, $61.95. So 62 bucks. Your B point is 50, so you get 12 bucks. Your C point is 55, so 45, 43 bucks is where this baby A to B equals C to D. And let's see what we got at 43. Yeah, this is not going to close at 43. Watch this. Ooh, this is disgusting. This is pretty disgusting. Whoa, baby. Man, it's amazing how they can take these stocks apart. I mean, I've been doing this for so long, and I know it, but when you see them getting taken apart like this, it's pretty intense. Okay, so, well, 42. 42 is not bad. So the first place it has any support whatsoever is 42. You know, we'll see how we can hang that. Where I'm going with the 42, by the way, folks, is that that's the week of December 8th of 2014. But there's not much there. And this is where it comes down to the texture of how you go up versus how you go back down. And this is always dangerous, meaning the trend that we had, and if we just look at this equity, what you're going to see is this. April of 2014, stocks trading at 28. It never pulled back. It went from $28 straight. I mean, you know, it's as smooth as you can get, up to 61. And then what do you have? Then you have a disaster on your hands. So you're coming down. You're in the markdown period right now. You can see on the way up, the volume is so anemic, it's unbelievable. But it was slow. It was steady. You know, each and every week, it was almost a higher high, excluding last September to October. But other than that, just went. And now you're going to see it give it all back. And, of course, on the way down, equities come down much faster than the way up. You know, let's go back to the S&Ps just for a second, because it looks like the S&Ps are the ones that are basically going to give us the lead out here. 10 minutes. There she is. So what this S&P did out here, it did. Okay, so watch this. If you just want to understand how, and when I'm doing this, folks, on an intraday basis, you don't have to be trading intraday. What you want to get out of this is that all these markets work the same on a daily, weekly, monthly. That this and this is why I really enjoy doing this morning show. What does happen is that when you're doing a intraday on a 10-minute, you can learn a lot more a lot quicker because that's just how they work. They work the same way. They're robust, and that's how a system's supposed to be. By the way, folks, it's supposed to be robust on the way down and on the way back up. So there's some uniformity and continuity to it. So what do we have out here this morning? Okay, so we hit the 68. That was 0630, right? You come down the first time that well, first off, we want to gauge it too, and this is what's always cool, is that when we opened, you had that high volume spike. So 82, that's where this S&P wants to go to, and that's where the NASDAQ wants to go. They all want to go to the at least the high that was generated out here this morning because it's a high volume spike high. We come back down. We come back down fast, too. Fast, furious, all of the above. You come back down, and we didn't make the swing point. So when you don't make the swing point, that's a big heads up in itself, meaning the swing low. Couldn't get to the swing low. This is the S&P. Couldn't get to the swing low. We get to 71.25. Now, at 71.25, we did, let's see, 80,000 contracts. You get a little bounce. We're in that same time frame, and now see, this is going to be it. This is going to be, you got underneath it, you rejected the lower price, and you're going to have lighter volume. Now, what that sets up is this. That sets up, can't bust them down. So what does it set up? Guess what? We're going to go for the highs now. And what is intriguing about this is that the 50-day moving average, the 200's way below it, this is where people can get hung up a little. And this is where the deviance comes in the marketplace, which I happen to love. You can find out more about the market, on the deviant part of it than you can just about anything, meaning the correlation of what are you doing. And to me right now, the bull would probably say that, hey, this is great, we're going back up. Some bears would say, this is beautiful, we're going back up. That I would be in that camp, specifically because it's acting correctly. Now, the proof would come not today. The proof would be tomorrow. Or that you get so much volume today that you have a lower low. I don't think that's going to be the case, though, because thus far, if we look at the SPY thus far has done 30 million. Oh, maybe we will. Oh, that's going to be cool. Yeah, you know what? Hold it. It's 1040. Yeah, that's what's going to, you know what's going to shake out here, folks? This will shake out. Yesterday, we did 89 million in the SPY. We've already done 30. What you'll have is that you'll have the rejection of price, but you will have higher volume. And what that does, that sets up another run to the lows. And that's where I would be looking for that confirmation, meaning that would be the really sweet type of confirmation that you did have higher volume, you got into a lower low, you did reject price, you did come into the May 6th level. When you start putting all those together, it's pretty cool. And if we go over, let's go over to the bond market for a second, because I believe what you're going to see inside this bond market. See, the bond market is helping the equity market come back. That's what's going on out here. Yeah. So the TLT has just gone from 116.11 to 116.59. Still a monster ABC structure on their way down, but that is what is helping this thing come back. You gotta love this is, folks. This is a trader's paradise. Okay, it's a two-way market. We haven't had a two-way market in so long I can't remember. Okay, two-way markets are totally where it's at. If in fact you are trading, if you're an investor, bottom line, just get your stops in, because that October 15th swing low is going to be a disaster. And bottom line is that just go look at the transports. We're going to hit it. That's the bottom line. The real question is, now how the summer is setting up is going to get interesting. This is why. So we're already into June. There's plenty of time. More than likely, what you're going to see we get the rollover happening, but it's probably going to start getting a lot nastier come after July 4th. The reason I'm saying that is that I expect even before that will be down about 5%, 7% at that point. You'll get a bounce going probably into July 4th, and then you just better watch out because I've seen some nasty markets the second week of July. For some reason, the second week of July, they can get some pressing going on inside the markets. And what tends to happen is that there's not a lot of traders around. So if you get one leg down in the marketplace and it's a heavy leg down, then you see some very fast, furious trading, because what does happen is that the traders will get back in to their offices, and as they get back into their offices, of course, what does that generate? That generates a lot more selling ASAP, because of the fact you have two different things happening. Now it's going to be a little bit different this year. What I was just going to say is that because they've already been in a winning position. See, the Dow's already in a flat for the year. So it's not that traders are in a, meaning investors, not the traders, money managers, not that they're in a winning position. That aspect that itself is going to keep pressure on the marketplace. The reason being, people are used to making money every single year now, because if you had been in the market, for the last 5 or 6 years, that money has been there. There's no two ways about it. It may not be what the indices have done, because most times most of these managers can't even really keep up with the indices. But the bottom line is that the money has been made. Dow right now is flat. That bounces on. The Nasdaq is down 32. S&Ps are off $1.50. And if we go over and we take a look at the Qs for a second, what you're going to see with the Qs did the same deal. How the Qs now come into this price point of, see, the Qs also should jump. Well, actually, let me put the NQs up, because the futures, because the QQQs open a little bit later. See, okay, so the NQs right now are at 406. That little baby, they'll get up to 428. 428 was the spike this morning. I know that sounds insane, but guess what? That's how it works. And if we get up there, how we get up there, I mean, if you get some volume, if they catch people on the wrong side, then you could basically get up to this 35, which would be a total mind blower. Nice move, though. That's where what you have right here is that bulls and bears can make money. That's where this whole thing is shaking and baking. What you do need, however, is what? You need movement. Movement in the marketplace, folks, whether it's up, down, or all around, is a big deal. Delta is still getting smacked out here. Oh, Lululemon. Let's go look at Lululemon. That is up 383. See what this equity looks like. I haven't looked at this for a long time. That was a hard charger. LU. Okay, so that's trading at 65.25. Yeah, so check this out. Okay, so I can see what this is doing. This is just making its way back into the downdraft that had been created out there, from December of 2013, with dramatically lighter volume. We came down on a weekly with 46 million shares. It was testing it with the 14 million. This is good. This right now, I can go test $70. I wouldn't be wrapping my head around that baby, though. She's coming into a downdraft that was vicious out there, just absolutely vicious. Some of the Dow stocks, well, actually, let's go see who is putting some juice into the Dow right now, since we have a flat Dow. Not that the Dow is down a lot. Putting the juice into the Dow is Caterpillar. Look at Procter & Gamble. You talk about a dead cat bounce. That's Procter & Gamble. That's up 60 cents. Apple is still... Apple is the drag on the Dow Industrials out here today. Apple is trading at the 126.13, and she has 4 million shares. Now, that's going to be light volume, because remember when we started here? Yeah. When I started, Apple, so all the selling came into Apple at the beginning of the market, because we've only done, it was 3.2 million when I started the program. It's only 4.5 right now. Yeah, I can see it drying up. So Apple's going to bounce too. Apple, Apple's at 126.18. That thing's going to bounce to 126.79. So let's go to the IBB for a second, because when you put this together, depending what vehicles you like trading, see the IBB is bouncing too. The IBB right now only has 600. Yeah, IBB. That only has 625,000 shares traded. We got a low out here of 358. You're at 360. She's going to try to make it back inside the 361 area. So it's pretty early, you know, that the market itself, now the market itself will try to grind higher. Your next benchmark. Oh, let's go to Marie. Hi, Marie. How are you?
Oh, I'm fine. I was wondering if you've covered natural gas yet.
I haven't. I'd love to do that. Let's take a look at it. So first, what I'm going to do is actually bring the contract up, and the contract is up big today, folks. It's up 4.1%. NGQ5. Okay, so let's see. We go. Look at, she's got force behind her too. Okay, so we have 36,000 contracts traded. Yeah, she's got action here.
So you think this is going higher then?
Yeah, this is going to go after its swing point. Let me just see this for a second. Okay, so we are at yesterday. Yeah, yesterday was a straight too. Yesterday we did 70,000 contracts. You've done 36,000. So that's saying that, you know, we're at 280. That wants to make a run to 316. If we go look at UNG, that's what you want to look at, right?
Well, actually, I'm in UGAZ, UGAZ.
Okay, UGAZ.
But I usually follow UNC.
Yeah, absolutely. See, can you just wait 1 second? We'll be right back.
Sure.
Awesome.
Sure.
This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's down 6. Nasdaq's off 30. S&Ps are off $1.50. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow flat. NASDAQ is down 27. S&Ps are flat. We're talking with Marie from Pennsylvania, and we're talking about the natural gas market, folks. We're looking at UGAZ. UGAZ is the Velocity shares 3 times long leveraged ETF. This is trading right now at 227. And yeah, Marie, I mean, the way this is trading, you know, this thing wants to get up to that 270 to 325 level. That's the way it looks.
Yeah, I was worried because the volume didn't seem high enough.
Yeah, the volume is not conducive on this to what it is in the futures contract, that's for sure. You know, but what is cool, okay, so when I trade these, right, you know, if you can get futures, if you can't, just call any of us up, okay, so that we can pull them up for you, because it does have the volume in the futures, and that's what really matters. That's the bottom line. You know, some of these contracts, you know, are not as liquid as they should be. Like this is only 39,000. No, let's see, UG. I think this is pretty liquid, actually. Yeah, it's plenty liquid, right? You know, but the futures has the contract, and the futures run the ETF. That's what it comes down to. You know, what is interesting, though, is that when this did come down on the 28th and the 29th of May, that volume was vicious. That was, you know, and that wasn't like that in the gas contract. So, you know, you get a little divergence there for sure, but it looks like natural gas wants to go higher.
Okay. What, can I ask another question?
Sure.
I noticed Franco-Nevada, Royal Gold, and such aren't doing so well today, yet gold had been up. But
let's take a look. We'll start with FNV. So Franco-Nevada. Oh, yeah, no, this is okay. This is good. I'm glad you called him. Okay, so watch this. We've only done 184,000 shares on Franco-Nevada. She's
so
coming.
The light volume makes it
It's sweet. No, it's actually sweet, yeah. She's coming into 1.1 million shares. That would be the swing point from March. That's how I come off the low. So I like how that's working there. What was the second one? Royal?
Yeah, Royal Gold was about the same.
Yeah. And one of the keys inside these two, folks, is that they're both. Yeah, I like this too. See what's happening? Okay, so watch this. Now, they're lower, folks. Both of them are lower. Royals are lower also by 82 cents. 114,000 shares. This little baby, though, is also coming into 1 million shares. You know, so it looks like, you know, I suspect maybe even before the end of the day that those might get into the positive area. You know, when they couldn't hit gold last week, Marie, that said quite a bit. You know,
Okay.
I mean, they hit it down on price, but they didn't destroy it. And
Okay, you don't think Royal Gold's going down to 62.71, that swing point in
no, it can get that can get there.
Yeah.
Are you looking to buy it? But yes, that can get there. Yeah.
Okay.
Okay.
All right. Thanks a lot.
Have a great one, man.
Right.
Woman, sorry. Have a safe one.
Okay. Bye-bye.
Let's go to Tom in Dallas. Hey, Tom, what's going on?
Hi, Tom. How are you?
Doing great, man. You having a good day out there?
Pretty great.
Cool.
We talked a week ago about getting a place, waiting for Wynn Resorts to bounce and short, and I wish we had a little bit more time for you to go through several aspects of this chart with the big volume day down on was it May 29th, and then was that a sign of strength that came in on June 4th? How do you interpret that? It went up to a swing point with a really, really low volume.
Yeah.
But
you
then,
know, and I'm sorry, there's just not enough time. But hey, this afternoon, I'll run over it ASAP at 3 o'clock. All right, man?
Great. Thanks, Tom.
Stay right there, folks. I got, man, Basil Chapman coming up, folks. Dow's up 5, Nasdaq's down 25, S&Ps are up a buck. Basil's coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.